Most people won't get it. They'll read the headline, scroll past it, and go back to losing money. But the ones who understand what just happened, they're about to get rich. This trade deal between the US and China, it just flipped the board. We went from uncertainty, chaos, and tariffs as high as 145% to progress, clarity, and upside. Not fake optimism, real momentum. And the market's already reacting. S&P futures are ripping while retail's still asleep. Here's the truth. You either see it early or you see it too late. This isn't a guess. This is a pivot point. And I've got 3 stocks that are perfectly positioned to explode from this. Not 6 months from now, not after CNBC talks about it, right now. But I'm not giving you the names yet. You're going to have to earn that. I'm up over $600,000 this year while the market's bleeding. Why? Because I watch the game, not the noise. You want to win? Pay attention. You've got one shot to get this right. Let's go. Everyone's acting like this was a fair negotiation. It wasn't. China came to the table because they were bleeding and they couldn't hide it anymore. Their exports were falling, youth unemployment was skyrocketing, foreign capital gone. This wasn't a show of strength, it was survival mode. Here's what no one's saying. The US doesn't need China like it used to, but China cannot survive without the US consumer. We buy more Chinese goods than any other country on earth. That trade deficit? Well, $1.2 trillion. And while the media spins this as mutual progress, let's be real. China came to Geneva because their economy was cracking under the pressure. Tariffs as high as 125% were decimating their export base. Internal unrest was growing, youth jobless rate near 20%, investors were fleeing, and Western partnerships were evaporating. So what'd they do? Show up, smile, and agree to anything that looked like progress, because the bleeding had to stop. They signed on to a consolation mechanism that's code for, we'll play ball if you stop crushing us. The takeaway? This isn't peace. It's a white flag with lipstick. China blinked. That's why this deal matters. Not because of what was signed, but because of who cracked first. Everyone loves to talk until reality punches them in the mouth. The truth, the US was running out of time. The tariffs weren't just hurting China, they were torching our own economy. Inflation was ripping, supply chains were choking, manufacturing was on life support, and the average American paying 20% more for the same damn goods. You can only run that game for so long before the market and voters start revolting. Tariffs on Chinese imports hit 145%. CPI was flashing red with year-ahead inflation at 40-year highs. Semiconductor shortages crippled everything from cars to AI chips. Made in America sounded great until it crashed into labor costs and reality. The politicians knew it, the Fed knew it, Wall Street knew it. The US wasn't negotiating from a position of dominance. It was bleeding from self-inflicted wounds. And with an election coming, you think they were going to walk into campaign season with a broken economy and no trade wins? Not a chance. So they spun it. Substantial progress, constructive talks, sounds nice, but here's what really happened. They blinked, because if they didn't, inflation would get worse, consumer sentiment would tank, and they'd be handing China the PR win of a lifetime. This wasn't strategy, it was survival. The takeaway? Don't confuse strength with stubbornness. The US needed this deal just as much as China, maybe even more. And now that the lid's off, the markets are going to move fast. The market doesn't wait for confirmation. It moves on expectation. And if you didn't see this coming, that's on you, because I did. I've been saying for weeks, the moment a trade deal hits the tape, this rally starts. And guess what? It just started. S&P futures are ripping. Volatility is falling. Money is rotating back into growth and technology. This is the pivot point. Most investors are still confused, sitting on their hands, waiting for some official green light. But smart money already moved, because this is what it does every time. It front runs the headlines. The S&P 500 is still down year to date, but the tide just turned. The macro setup is easing. Less tariffs, less chaos, more certainty. Capital is coming back off the sidelines and into momentum. I'm not shocked. I'm ready. I'm already up over $600,000 this year, and this is the exact moment I've been preparing for. My goal is to make over $1 million this year, and if we keep moving like this, I'm going to blow past it. Now, you can call it luck, or you can realize the setup was there. I saw it, I acted, and now this party is just getting started. Our takeaway? The breakout has begun. And if you're still watching from the sidelines, you're not late, but you're damn close. Our stock spotlight, NVIDIA. Let's stop pretending. NVIDIA didn't get caught in the crossfire. They got sucker punched by their own government. They spent months redesigning their AI chips to follow export rules, complied with everything, got pre-approvals, and then boom, the US changed the rules after the fact and slammed the door shut. $5.5 billion in orders, gone, written off just like that. Most companies would have curled up and bled out. Not NVIDIA. They shook it off and went straight back to work. They're now redesigning the H20 chip again, stripped down, downgraded, whatever it takes, just to stay in the Chinese market. And they're doing it fast. New shipments already planned for July. That's what dominance looks like. You get hit in the mouth and you punch back harder. And why are they doing it? Because China's AI market is about to explode. $50 billion over the next few years. Alibaba, Tencent, ByteDance, they're all stockpiling NVIDIA chips because Huawei can't keep up. NVIDIA still runs the table, even with the brakes on. China, that equals 13% of NVIDIA's total revenue. They're the only company delivering scalable AI hardware at that level. They move faster than governments can regulate. Look, the stock is down 15% this year. I don't care. That's not a signal of weakness. That's the setup. NVIDIA didn't lose pricing power, it lost time, and now it's making up for it with a vengeance. Here's the part that matters. NVIDIA's down, but the business is stronger than ever. They've got 50% profit margins, 50% revenue growth, and they're moving faster than regulators can block them. The rest of the world is tiptoeing around China. NVIDIA's finding a way to sell there anyway. So yes, you can sit around and wait for analysts to upgrade the stock after it runs, or you can buy the dip while it's still quiet. But don't kid yourself. When this turns, it's going to rip. And if you're not in when that happens, don't say I didn't warn you. Next up is Robinhood. Most of you missed the first wave. You watched Robinhood explode in 2021, laughed when it crashed, and told yourself it was over. Cool. That was your first mistake. This trade agreement just handed you a second shot, so don't screw it up. Markets hate fear. Retail hates uncertainty. This trade deal just erased both, and that's Robinhood's trigger. The moment risk comes back on the table, retail traders light up. Options, crypto, meme stocks, you name it, and every click, every trade, every dollar that moves, Robinhood takes a cut. They don't sell hope, they monetize confidence. And confidence just got injected straight into the bloodstream of the global markets. Now here's what makes this lethal. Robinhood's ready. 1.9 million new funded accounts. $18 billion in net new deposits. Gold subscriptions are up 90% to 3.2 million, and these aren't broke gamblers anymore. The average account size, over $8,600. That's serious money. And while the US side is gearing up for a retail flood, the global side is the part no one's pricing in. Robinhood's going international fast. They've already onboarded 150,000 new users. They're launching in the UK, expanding across Asia, and about to close on Bitstamp, a global crypto exchange with reach into 100 plus countries. You want to know how you scale? That's how. You've got a world full of mobile-first investors who hate their outdated brokers. Interfaces that look like Windows 98. Robinhood is walking in with a clean UI, zero fees, and every product those users want at the exact moment the global market pressure just let off. The trade deal didn't just help Hood USA, it opened the floodgates for Robinhood Global. The takeaway, you missed it once, don't miss it again. This isn't the same company from 2021, and this isn't the same market. The spark just hit. The gunpowder's stacked, and if you're not in position, don't cry when this thing goes vertical. Next up, Palantir isn't a hype stock. It's a wartime company built for peacetime profits, and this trade deal just gave it both. Here's the truth nobody wants to say out loud. Palantir makes money whether things are good or bad. In conflict, governments double down on defense and intelligence budgets. In calm, enterprises scale AI adoption and lean into infrastructure. And right now, we're entering a rare moment of both. This deal doesn't eliminate risk, it reshapes it. Geopolitical stress doesn't vanish overnight, but now it becomes predictable. That's what Palantir needs to win long-term contracts and compound profit. The government side, stable funding, long-term deals, more clarity. On the commercial side, AI adoption, acceleration, especially in Asia. And platforms like Foundry and Apollo, perfect for supply chain optimization, logistics, forecasting, the exact things global companies need post-trade disruption. Palantir has already proven it can scale both sides of the business. Their commercial growth is now outpacing government revenue. That's a big deal because it means they're not just a defense contractor anymore. They're an operating system for AI deployment at scale. Now, let's address the elephant in the room, the PE ratio. You're looking at it and thinking 512, this thing is overvalued. Cool, then short the stock. Or stay on the sidelines and miss the run. It's your call. Because here's what smart money understands. Palantir is still in hypergrowth mode. The margins aren't optimized yet because they're still building. But as revenue compounds, that PE compresses fast. You wait for a reasonable multiple, and this thing will already be 2 or 3 times from where it is right now. You see, you don't buy a rocket on the launch pad and complain it's burning fuel. You buy it because you know where it's going. Our takeaway? If you believe global business is about to speed up, you want to own the software that runs it. Palantir isn't speculative anymore, it's operational. The opportunity is right now, not when the valuation looks comfortable. And if you're scared of the PE ratio, you're not ready for the gains. So is this a long-term buy signal or just a bounce? Let's cut the crap. Every time the market pops, people ask the same weak question. Is it real? They want some perfect signal, some analyst to confirm it's safe. Here's the reality. If you're waiting for confirmation, you already missed it. This trade agreement is not a full peace treaty. It's a pressure release valve, but that's all the markets needed. Uncertainty drops, volatility calms, risk appetite returns. It doesn't need to be perfect. It just needs to be better than panic. The bull case is simple. The S&P 500 is still down year to date, but futures are ripping. China and the US just stepped back from the edge. Capital is rotating back into growth, tech, and momentum. Retail investors are coming off the bench, and platforms like Robinhood are already monetizing the wave. Companies like Nvidia and Palantir, they're positioned for scale the moment the dust settles. And now let's go over the bear case. Volatility isn't dead. Tariffs are still high, and full de-escalation will take time. The macro risk isn't zero, it's just less visible. But here's the bottom line. Smart money isn't waiting. It's moving right now. You've got 3 companies, Nvidia, Robinhood, and Palantir, each with a unique edge in this exact environment. They're not stuck, they're executing fast. If you're still holding back, trying to time the exact bottom, you're not investing, you're guessing. The takeaway, this setup doesn't come around often. You've got global tensions easing, high-quality companies on sale, and momentum building underneath the surface. This isn't a bounce, it's the ignition point. And if you're not positioned before it rips, you'll be watching from the sidelines again. We just broke down the full setup, the trade deal, the market shift, the 3 stocks perfectly positioned to move. This isn't random. This is what happens when preparation meets opportunity. And right now the window is open, but not for long. You don't need to wonder if this strategy works. It's already working. Here's what Steven posted inside my Discord. He's brand new, just started, and between April 29th and May 9th, he made over $2,000. His words, not mine. Bullseye, holy shit, damn. That's not luck. That's what happens when you stop reacting and start executing with clarity. I'm already up over 600,000 this year, and I'm definitely not slowing down. I've been building for this moment all year long, and now the market's starting to reward it. And I want more people like Steven inside. Focused, serious, and ready to move. If that's you, here's what you get inside my Patreon. Real-time trade alerts, no guessing, no lag, daily market breakdowns so you know what's moving and why, the exact strategies I use to generate weekly cash flow and compounding long-term wealth. This isn't hype, it's not a lottery ticket, it's just execution. And if you're watching this and still on the sidelines, ask yourself why. You can stay stuck, scrolling for tips, or you can get in, lock in the edge, and go. But whatever you decide, don't say you weren't told.